Hey, what's up, guys? This is Mario, and today I am gonna go over my day trades that I made today. I did make three trades. I missed one opportunity, won two, lost on one. So it's a pretty good, even I guess ratio. So percentage-wise in terms of trading, so that looks good. I'm going to go over exactly what I looked at, why I traded it, and my exit trades, and what were my mistakes on my trade that I lost, and a missed opportunity that I have. All right, let's get started. So the first trade that I made was MDGS, and the reason why I made this trade, it was on my scanners. It was up more than 5%, and it had a lot of volume. So when I was looking at this trade, there was a huge uptrend in the morning. Nice huge upturn in the morning. Right away I was looking for a pullback. So I did see a pullback, and it kind of pulled back to around 175, actually 180s, 190 level right there. So I wanted to see if this pullback was going to hold, and if it was going to create a lower highs, and it was going to break out of this $2.10 level. Which it did. So this candlestick right here was my trigger. So when I saw this breakout of this level, so if I zoom in, you see this higher lows, and it break up this level. And why is 210 an important level? Because if you guys look at the chart, you know there's a gap fill over 210, so it breaks out of there. It's like kind of like breaking out of resistance. So that's kind of why was my thought process. So my thought process, if I buy at around 210 or 211, I'm risking around maybe 10 cents to make 20 cents. So I did buy around, I believe I did kind of get filled around. Now, this this stock did kind of move pretty quick, so I did end up buying above 210. And I believe it was around maybe 220, and I was looking for a target of 240. Now got really close, so I was looking at the chart, and I did notice that there was some resistance here at 230s, 235s. So I knew that if this level didn't break to 240, and depending the candle, I was going to get out, because again this was going to act as resistance. So I did see this kind of doji candle, and I decided to get out on this candle. Still made some money, but again, I didn't hit my target, which is fine, because hey, if you don't get your hard target and the stock does not act how it's supposed to act, you got to get out ASAP. Especially on these small caps, stocks are traded under $5, because they're very volatile. They do give good trading opportunities for quick scalps, but once they don't start looking so hot, you got to move on to the next one. So that was my one of my first good trades. My second good trade was MTSL. Now, if you look at the 5-year chart, you can see that $3 is actually a pretty important level of resistance, which again could turn into support. So the reason why I traded it was, again, it was on my scanners. It was up more than 5%. There was a lot of volume. The day before, it had a lot of volume. So I knew there was going to be some momentum today, and a move today because of yesterday's volume. So what I was looking for today, well, first of all, I did notice that pre-market, it did kind of spike up pretty high, and it was selling a lot. The other thing that I noticed was that it was a low float. I believe it was under 5 million shares. So let me look at that. What was the float on this one? So I could kind of show you guys something. So let me see, MTSL. So the float on this one was actually not even 2 million. So this is a super micro float. So you're looking at, not even 2 million share float, and today it traded around 10 million. So there's a lot of float rotation. And I also noticed that there was no shares to short on my IB, my interactive brokers. So I knew there was heavily shorted, which could allow a squeeze. So again, if you guys notice the pre-market, there was sell-off, lower highs. So I could see a lot of these traders short pre-market and looking for, of course, to take money at the open. So I did notice that they might cover here at 3 because it is, again, according to daily, could be a support. So I did see this candles. It started to hold higher highs, higher lows, which again, shorters most likely are covering. And I knew there might be opportunity for a short squeeze. So I did see this kind of this top right here, which is around 367, 368. And I felt that this trend continued to go up, and it did break above 368, that this thing could go to 4 to kind of squeeze some shorts. So and that's what happened. This was actually my trigger candle. So I did buy around 370, 371. There was a little bit slippish, which is fine. And my target was around 4, and it did hit 4. It actually hit above 4, around 412. So once it hit my target, I took my profits and called it a day. It was a quick scalp. Again, this was the trigger candle right here, breaking out of this level right here and out of this higher lows. So that was it. That was a quick scalp, and I was done with it. Now the next stock, now those are the two stocks that I traded that I made money on. Now the stocks that I actually lost money was actually Apron. Now why was I interested in Apron? Blue Apron, which I don't know if you guys are familiar, but they do send like pre-prepared meals to your house. You can kind of cook at home. It includes all the ingredients, the recipes, which is kind of cool, I guess you could say. Now, the reason why I traded Blue Apron was because it looks like it's trending. You know, if you look at it, it's been kind of reversing its downtrend. So it looks like it's trending. You know, so and yesterday it had a pretty good uptrend and breakout of this level, this 368. So I was looking for a secondary continuation, a continuation of that trend. Now it did sell off at open week, so I was hoping for actually it opened at week. There was very, very low volume and there was a spike. I was hoping for a sort of like red or green quick spike in the morning, but it did not hold and it failed. So one of the things that I got to work on is to make sure that whatever I trade intraday or day trade, there has to be momentum. You know, if there's no momentum, there's no way that this stock is going to do anything. And momentum equals volume. If there's low volume and there's not a lot of people in this stock, and low volume is not going to do anything. You know, it takes volume to create momentum, to create a move. Similar like this move, you know, this move took volume, momentum. This is momentum right here. And if you look at the volume, you know, bars, you know, that is definition of momentum. You know, here at the open, even though there were some spikes, there was no momentum continuation. You know, like there was people maybe looking for that red or green, and that was me, including me, and it literally just kind of failed, and there was no continuation, and it just literally went nowhere. So that's something I got to work on and keep in mind, to always look for volume, always look for momentum before I make the trade, especially day trade. That's the most important thing to make a move. So again, learning lesson for me. I'll keep that in mind for future trades. Now, I set up that I did miss, that it was actually really good day trade opportunity, was actually fast. Now, why was this an important stock to look at? You know, if you look at the 1-year chart, I mean, it's a stock that is definitely trending, but it had maybe a bad earnings, and then there was a sell-off. But today, there was a reversal of that downtrend. Huge volume intraday on earnings. So there was, and again, this thing was on my momentum scanner, up 5% with huge volume. And the funny thing is, the stock that I lost money on was actually Blue Apron. That was not on my momentum scanner. So that is something that I'm going to keep in mind, that, you know, trading stocks that aren't your momentum scanners, but you're probably better off, because you know there's momentum, there's a lot of volume, you know, and volume equals momentum. So something that I'm going to keep in mind for future trades. So again, there was huge volume at the open pre-market. There was a weak open, but this weak open got bought up, and it literally spiked and hit that 52 level, pulled back and held the VWAP and started a trend. So my trigger was actually a break of this level, which is right here, break of this 52 level, And I kind of hesitated because this break was too fast for me. I kind of didn't really, I guess, maybe time it well, or because it did break, and I should have gotten it on this candle, but I didn't because, and actually the main reason why I decided not to, believe it or not, was because I felt like it was I was chasing. But if you really think about this move, this is not, this is a pretty big move, because if you look at it, it went from 52.50 to 54.50. So like a $2 move within literally half an hour. And it made another, I guess you could say, uh, almost $2 move, and then the next half an hour, or 45 minutes. So this thing, I literally missed like almost like a $4 move, because I felt like I was, chasing 30 cents, So again, for future learning purposes, this is something I'm going to keep in mind, that these things can run, especially if there's a catalyst like an earnings, and again, it's a reversal of a trend that again, fast. I mean, if you look at fast on Finviz, let's look at. Let me check what's its float and short percentage. Now, float is 286 million, so it is pretty high, but the short float is around 8%, which is not too bad. But I think the most important thing is literally that reversal of downtrend that I think really caused a lot of these shorts to cover, and this momentum to really get insane. So again, what's important when it comes down to day trading is momentum, regardless of the setup. From my experience, I've seen a lot of good setups, but when there's no momentum, there's no volume, these setups do not work. And especially for day trading, there has to be momentum, there has to be volume, liquidity, because if there's no volume, liquidity, these things are not going anywhere. So I know I missed a great opportunity here. And I think the main reason why I decided not to trade is because I was already up on two, lost in one. I was already green for the day, and I kind of didn't want to take this last risk. They could have maybe cut on my profits in case I was wrong. So I decided not to trade it. That's probably one of the biggest reasons why, to be honest. But hey, when you got good risk reward, I guess honestly, chasing a little bit is okay. But honestly, if you really look at the big move of $2 over $4, this really wasn't a chase, regardless, because of just how big this move was. So hopefully you guys learned something from this video. Again, guys, if you have any questions, feel free to make those comments. Let me know what you guys think, and you guys will hear from me soon. Have a good one, guys.